Happy Friday! Before we wrap up the week, we take a look at BIMB Holdings. RHB Research is keeping its buy call on the group but raised its target price to 5 ringgit. The stock last settled at 4 ringgit 41 cent, so that's a possible 13.4% upside. On December 10th, BIMB announced that it had obtained the green light from the Finance Ministry and Bank Negara for its proposed internal reorganization plan that involves a capital repayment and the transfer of listing status to subsidiary Bank Islam. The good news is that, according to RHB Research, this should clear any uncertainty that had been haunting the group's restructuring plan because it had been taking so long. RHB Research says it continues to like BIMB for its defensive portfolio, which comprises mainly household borrowers who are made up largely of civil servants, which technically are fairly solid paymasters. This better safeguards its asset quality. Speaking of outlook, do note that BIMB is the only listed Sharia-compliant lender in the country, and this would continue to attract Sharia funds wanting exposure to the banking sector during the recovery upswing. For now, RHB Research is maintaining its earnings forecast but raising its target price from 4 ringgit 30 cent to 5, taking into account a lower risk premium assumption and valuing it at 1.3 times FY21 price to book value. So what's the consensus? The latest Bloomberg data shows there are 5 buys, 3 holds and 1 sell, which results in an average target price of 4 ringgit 28 cent. But BIMB has already surpassed this, having last closed at 4 ringgit 41 cent.